Barron's picks 10 favorite stocks for 2024. Alibaba Group Holding, one of the cheapest tech-oriented companies in the world. After dropping 18% in 2023, Alibaba's US-listed shares trade for just 8 times projected earnings in its current fiscal year ending in March, the report said. With that decline, the stock, at a recent $72, is back where it stood following its 2014 initial public offering, despite a tenfold rise in revenue and a fivefold increase in earnings. Alphabet Inc. It could be the best bet among the Magnificent Seven stocks, the report said, and Barron expects it to grow as fast as Microsoft with 15% up earnings, 3 times the speed of Apple's. Barrick Gold. The company aims to boost its mine output by 30% by the end of the decade. It has the industry's most effective leader in CEO Mark Bristow, a swashbuckling South African and hands-on manager who visits each major mine at least 3 times a year. The company has virtually no debt and a 2.3% dividend yield, according to analyst Keith Trauner. Also, the stock trades for about 16 times 2024's projected earnings. Berkshire Hathaway. Warren Buffett has positioned Berkshire to succeed without him, the report said. Earnings for the company are growing, with Berkshire's after-tax operating profits up almost 20% in 2023. They could hit $40 billion this year, powered by higher interest income on Berkshire's cash and strong insurance underwriting results. Biogen. Although the stock is trading at around $104, down from a peak of $447 in 2021, the company's oncology-focused pipeline could prove more promising than some investors believe. The company has in cash almost 3/4 of its current market value of $25 billion. Chevron Corporation. The company trades at 10.7 times the projected 2024 earnings with yields of 4.2% and plans to raise its dividend by 8% in January. Chevron has a lower risk growth profile than peers, trades a 15% discount to its average cash flow multiple, and should have a total yield, plus buybacks, of about 12% after the Hess deal closes, said Adams Funds analyst Greg Buckley. Hertz Global Holdings. The stock is cheap, and it trades cheaply at 8.6 projected 2024 earnings, while its market value of $3.1 billion is less than half that of the somewhat larger Avis, the report said. According to Deutsche Bank analyst Chris Waronka, this could be overwhelmingly attractive for patient investors. Madison Square Garden Sports. The company owner of the New York Knicks and Rangers, which are worth $7.4 billion and $2.45 billion respectively, could sell a minority stake in their teams, buy back a lot of the stock, or pay a dividend. The ultimate payoff would be a sale of the entire company, and there probably isn't much downside, given the discount to asset value, said Jonathan Boyar, president of Boyar Research. PepsiCo. The beverage giant expects to deliver per-share earnings growth at the top of its high single-digit annual target in 2024, after a projected 13% gain this year, the report said. The stock trades for 20.6 times 2024's projected earnings, yields 3%, and has raised its dividend for 51 straight years. UHaul Holding. The $12 billion company has steadily built a sizable self-storage business that now ranks 3rd in the industry and could be worth $8 billion alone based on comparable companies, the report said. Shares are valued at about 14.1 times earnings at $63 per share.